Good morning, everybody. Kane should be joining us in any minute, and then we'll get started for today. Sorry, I don't have the camera seems to be not working. Hey, Jill. Morning, Robert. Peter, good morning or good afternoon. Tammy, how are you? There's Kane.
Hey everyone,
Perfect.
sorry about that. My keyboard wasn't working. I couldn't it was all sorts of challenges. Uh, all right, let's see what we got. Let me get YouTube open. I completely forgot about YouTube yesterday, and I can at the very
It's
least.
on. I
It's
turned it
on?
on yesterday.
Oh, okay,
Yeah.
great. Yeah. Well, I can't turn it on, but were people commenting? Uh,
Uh, a little bit.
a little bit. Yeah, let me just get it
If
open.
you click on the link, you should be able to open it. So
Oh,
Zoom will have
okay.
a link.
Zoom. Oh. Uh, huh. All right, I'll just go directly to the live stream as if I'm just a participant. Okay. All right, so yeah, we got a couple people there. Hey, Kevin. Hey, Peter, Richard, and Mike. And who do we have here? We've got Catherine and Bernadette and Steven. Whole bunch of people. Volume up again. Okay, let me do that. Okay, is that better? And then let
Yeah,
me get
that's
my
much better.
screen resolution down so you guys can see better. Got to figure out the chat box so I can see what you guys are typing closer to real time. Uh, Oops, that didn't work. Okay, there we go. Let's see. Got Hopium, Jill, Frank, whole bunch of people I probably missed and skipped. Apologize, Omar, Jill, Ron, Jason, Sharon, Julie. Okay, all right, great. All right, guys, let's yesterday, we sort of completed the topic, but let's take a look at what's actually going on in markets. Oh, my ticker sign isn't moving, and and we'll see what's relevant actually right now in this moment, and then we can move on and talk about other things. So let me go ahead and share my screen, and S&P 500, you can see pulled back a tiny bit, not really significant. Down 0.17% from yesterday's close. And what we see is that it's not hasn't really limited range. Really limited range. Yesterday we ended up getting decent volume, but it still didn't go anywhere. And today it's looking similar. The start of day yesterday, volume was low. So we'll see if volume picks up, but it's not really going anywhere. Yeah, we get baby gap down at the open, but since then it's not really gone anywhere. So the holiday week is probably having a pretty strong effect. We do still have some catalysts, as some economic news, I should say, which could be potential catalysts. And let's see, today we had the PMI ISM construction spending, JOLTS. Yesterday we had that Chicago PMI. Tomorrow we've got ADP, which is, we'll see. So we should get the the employment situation on Thursday. So this is going to be probably the biggest one of the week, but then it's coming on a holiday right before, the day right before a holiday. So we got to be careful here because that could be a little bit of volatility, but I'm not really expecting a lot of directionality this week. It's holiday week. So we're probably either really going to like chop sideways or really slowly maybe start that mean reversion that we talked about yesterday. So let's take a look and see if the picture is any different than what we saw yesterday. What we didn't do yesterday was we didn't look at RSP. So equal weighted, we went and said, hey, a lot of this is driven by those really large cap stocks. It was really only driven by maybe 19 stocks in the S&P 500. And it was really being driven by, we didn't go as this far in the analysis, but Microsoft, look at that run up from the beginning of of this year, of 2025. If we go beginning of 2025, okay, up to yesterday's high, that was 17.5%. Even if we count today, that's 15%. So that's definitely better than just barely making an all-time high on S&P. And then, well, actually, let's actually compare because did we start? Oh, we started pretty close to all-time highs on the S&P. So right at 2025, we go there. S&P is only up 3.5% as of yesterday's high. So Microsoft, definitely a driver. NVIDIA, NVIDIA, not so much, 7%, just because it happened to be at this really big high right here. But definitely in this time period, a driver. What else was there? I think Netflix and FLX. Oh, for sure, Netflix. Look at that. And Netflix up, as of yesterday, about 50%. And even today, we're looking at 43%. So these are big mega caps that were really driving the S&P 500. So we should be able to see a stark difference between the RSP and the regular SPY if what I was talking about was actually in effect. So let's take a look at the SPY again. We have the all-time highs. And if we look at RSP, not all-time highs, right? All-time high was over here. So we're not even close to the all-time high on the RSP. We got a nice spike up today, which is interesting. So we'll talk about that in just a minute, or we'll break that down a little bit. But as of yesterday, when we made the all-time high in the SPY, we were just right here, okay? And yeah, we had a V-shaped recovery, but it wasn't to all-time highs. So today we're starting to play a bit of catch up. This is a big bar, and this is a big bar, especially in light of the fact that the S&P is kind of flattish and it gapped down a tiny bit. So we're starting to see a little bit of rebalancing here. We're starting to see people go, hey, maybe we should exit or take profits on some of these tech and financials that we saw were super popular. And now maybe we want to go into something else. So let's take a look at what sectors are doing well today. Okay. So what is this guy? That's home builders. That's interesting. Did we have some bond news today? We have retail, that's doing well. Then we've got materials, we've got XBI, which is biotech. We've got healthcare, we've got discretionary, we've got real estate, energies, staples, industrials, financials, and then that's the S&P right there with the candles. So just barely underperforming today is, which is this one, utilities, and then underperforming is gold. Then we have bonds, then we have communications, SMH, tech, and ITA defense. So all the tech and communications and defense are at the bottom. So we're getting much larger market breadth today, like how many sectors are outperforming the S&P itself. And then we're seeing some money leave the communications and defense sectors, which is really interesting. And this goes to show S&P is actually down a little bit, but mostly flat. I would just call it flat. What that means is that money was concentrated in a very small number of sectors, and it takes all these other sectors moving up, and look how much this one's outperforming, home builders is outperforming, and the S&P is still flat. So that goes to support everything that we were saying before. All that money was concentrated right over here, mostly in tech, looks like, because financials are up today also. And then defense, probably because of what was going on in the Middle East. So over here, what we want to ask ourselves is this just today, or is this going to be a longer term effect? If we go back and we look at behaviors of V-shaped recoveries, there haven't been that many. The most recent one was COVID, and then we have this one. So it's interesting that we have two in a row. So I would be looking and watching very carefully and asking myself, is this starting to become something new in the markets? Are we going to see V-shaped recoveries more commonly now, or more than we used to? And are V-shaped recoveries going to start becoming normal, and the U-shaped recoveries becoming less normal? Now, I don't think we're at that point yet where V-shaped recoveries become more normal than the U-shaped recovery, but I think we're going to see this a lot more often because of how many new participants are in the markets, of the changing nature, like high frequency trading, or that's just increasing more and more, algorithmic trading, and then things powered by AI. And what's interesting is that normally when a market matures, you see volatility collapse, overall volatility. And that's why people like to invest in the US stock market, because it's steady, it's stable. That's another word that people use. It's stable. We don't have giant shocks from government. We don't have giant shocks from the economy. We don't have these crazy, for the most part, unanticipated things. And anything that hits us that is unanticipated, it's very likely that's hitting all the other countries as well. Like COVID hit absolutely everyone. This tariff shock, yes, it originated in the US, but it had the power to reach worldwide. So what's going on here now is that suddenly a V-shaped recovery is what? It's volatility. It's in a short period of time, prices moved a whole bunch and then moved a whole bunch back. So what that's telling me is that there is a new force inside the markets. And that force is causing freshness and newness inside the markets. And it will take a while for the markets to absorb that and then go back to the same levels of volatility that we saw before. So we'll take a look at that in terms of VIX, see if what I'm saying is correct. And then we'll see about these V-shaped recoveries, what it means and how that impacts our trading and what it means to institutions as well. So if I have the volatility and volatility, we had a clue yesterday when we talked to Lance, and he said that, oh well, all the action is in these no name stocks, no one's ever heard of them, like junk stocks, because, and I commented, hey, because you're not getting the volatility in the market. Yesterday, look how tight that range was yesterday and so far today. So these high frequency trades and these algorithmic trades, these bots that the large funds and firms rely on, they need that movement. And so they're going to try to cause volatility. And if they can't cause it over here, they're going to move to an asset where it's easier to cause volatility. If they can't do it there, then they'll move to an asset that is easier, even easier. And so they'll keep on moving down the line. And for sure, when you get to smaller cap stocks, that volatility is a lot easier to introduce. So we're seeing that activity of all that algorithmic trading and all those bot traders show up in the markets in a way that we didn't before. So in fact, a lot of times when you hear in the news that these circuit breakers are triggered, it's because these algos are trading against each other and they keep driving prices down at a rapid pace, sometimes up, but mostly down. So I think that V-shaped recoveries are going to become more common than they were before, at least for a while, at least for many years. Okay. Let's see what you guys are saying. I need to figure out this chat thing. Okay. Rotation into diamonds, yeah. I didn't, okay. Dollar is strong all day, but not sure I understood why with increasing debt. Sure, okay, let's take a look at that. This is from retailers, isn't it? Not the rotation. Rotation is unlikely to be retailers, but being bid up over bought, maybe like deviation, not necessarily. The retail by itself has very limited power to actually drive a market somewhere, especially on the SPY. If we're talking about a small individual stock, then maybe, but we're talking about the SPI right now, so it's very unlikely that it's just going to be retailers. KTV. I don't know what KTV is. Oh. Institutions are in FOMO mode. They have been since over here, right? That gap up into above the MA200, yes, for sure. That was FOMO. VKTX. Oh. VKTX chopping sideways. This would be a nice income trade right here, or a non-directional sideways trade. In Europe, investors leave the stock market. They're leaving the US stock market. Okay. Yeah, so because they're probably seeing some instability that they're not used to. Yeah. Okay. I'm trading the money market maker move on SPY with an iron butterfly. Yeah, that's on a day like today. That's probably pretty smart. Just be careful on a butterfly if it's centered at your, if price is centered at your butterfly. I would close it before the volatility in the last half hour to hour of the day. Hi, John. Okay, let's see. Do you think the market will soon fall sharply? Is it time to be in all cash? Maybe soon, but I don't think we're going to see a huge correction this time. I don't think we're going to see a pullback, 5 to 10% pullback. We might see a 3 to 5 pullback. That's what I'm seeing right now. We'll go over that, and I could be wrong, but I'll decide that once we've fallen 3 to 5%. Then I'll decide, oh, maybe this can go to 10%. And then if we go 10%, maybe this can go to 15 or 20%. But right now, 3 to 5 seems likely. And so we saw that difference in RSP, and those two have to align themselves. And those can align themselves by either the S&P reverting down or the RSP going up. And so far, it's been the RSP going up. So that's a little bullish. That's implying that even if the S&P does fall, it's not going to be necessarily a super sharp 10% fall. That's one of the reasons why I said 5%, 3 to 5%. If we look at 3 to 5% from where we were yesterday, then we'll see is that 5% gets us pretty close to where all these moving averages are, the MA200 and the MA50. I have 5 to 6%. So do I think that we're going to correct so hard that we're going to blow back down below the MA200? At this point in time, that's pretty unlikely. And do I think that we'll even make it all the way back to the MA200? And with the strength of this trend right here, also kind of unlikely. So we would have to have some sort of market catalyst in order to drive that. Whereas if we have, in the absence of a market catalyst, or at least a market catalyst that people can recognize and see very easily, the likelihood of pulling it back that far is pretty unlikely. And if we look at this MA50, it's starting to go up pretty fast. So we could just pull back to MA50 and we would still be a bit above the MA200. So that's what I'm looking for first, before I evaluate whether or not I think it can go even further. Yeah. Unless I keep losing my chat. I gotta figure out Zoom. Okay. Let's see. Okay. Okay, let's see. With Senate passing a bill, would the market not go up? It depends on how much is already priced into the market. And we've known about this bill, and we've known about most of the contents of this bill for quite some time. So a lot of that is already priced into the market. So I don't expect to see, once it passes, a huge surge upwards. It would just be more like a continuation of a trend, right? So we'll have to see on the timing of when that bill is actually passed. But yeah, there are certain sectors for sure that are favored that would start to pick up even more investment, because we go from just a tiny bit of uncertainty to certainty. So that would give a boost. If we went from really uncertain to certain, then that would be a major catalyst that would drive things upwards. So right now, you're probably, like, for example, we probably should be pretty cautious about anything alternative energy related. Okay. So will we make it above that MA200 and above these lines right here? Okay, so those are areas of accumulation and distribution in the past. So we'd have to get above those levels, right? So maybe a bill passes, before the bill passes, we can get up there, and then bill passes, we start to head back downwards. So we just have to see about the exact timing and how much of the final version is different than the versions that we've already seen. There is a bib that keeps going off, like someone is on hold. Happens every time I do the webinar. Huh. Is it like a beep, or? That's interesting. I'll have to figure that out. Thanks for letting me know. Okay. Okay, so how do we trade this, right? So there is a bit of uncertainty. We are anticipating that at some point this should pull back. How far is a little bit of a question mark, but 3 to 5% is not unreasonable. If we look at 3%, 3% would just be just a little below that EMA 20. right? It'd just be right here. So that's perfectly reasonable. Pull back to the EMA 20 is, I mean, we already did it over here. So does that warrant a hedge? Well, I guess it depends on what sort of positions you have in your portfolio. It could warrant exiting, taking profits on some positions, so you have less exposure to the markets. So it's just, that's funny, Robert. Okay, so if we, so how would I go about doing this? Because right now it's difficult to justify going into shorts. And of course, if you're a directional portfolio, you always have a combination of longs and shorts. You just skew towards the long side or you skew towards the short side. So does everyone know what I mean by that? Do I trade futures, options on futures, or just stocks? And do I invest in cryptocurrencies? I do not trade futures because I want to turn my mind off at a certain point in time. I don't. If I traded futures, I would keep watching the markets, and then my wife would divorce me. So I don't trade futures or options on futures. The only time I would consider futures is if I see something happening overnight, like tonight or tomorrow, like something huge rocks the entire world. Examples, terrible examples, but for example, nuclear war, someone drops a nuclear bomb on someone else. That would definitely shock the markets. And so I would trade futures to hedge whatever positions that I had. Like if I was long a whole bunch and I hadn't hedged myself yet, it was totally black swan event. And then something like that happens, then I could trade futures to, of course, I'll still take a hit, but I could trade futures to hedge the rest of it. And that way I don't, when the market opens the next morning, I'm not down a gazillion percent. So that's what I keep futures accounts open for, but I don't trade them just because I need the mental separation. I'm ignoring you guys. What am I ignoring? I'm probably just missing your comments. Sorry, guys. And do I invest in cryptocurrencies? No. Okay, that's an interesting topic. If we look at current crypto right now, BTC USD. So I do not invest in altcoins or any random coins. The only ones that I would touch are Bitcoin and Ethereum, because those are the ones that were proven. Those are the ones that are getting all the institutional attention and actually can be argued serve some sort of purpose. Everything else is just like the .com era when everyone slapped www onto something and tried to sell it. It's just vapor. And at some point, they're going to disappear. So maybe more than just Bitcoin and Ethereum will survive, but those are the two that are most likely and most assuredly going to survive. And we need to recognize what phase we're in. Okay, so Bitcoin, the days of Bitcoin jumping up and making ginormous gains, those are kind of over. So if we go from, say, 2020 to 2021, okay, that was 573%. If I go from 2021 to 2022, come on. Right, that was another 65%, unless I grabbed it at a wrong place. But it was, or even if I do it from down here, that was, okay, 135%. If I go 2022 to 2023, that was down. I'm not going to count that. 2023, because I'm only interested in the speed at which it can grow. So 2022 to, or 2023 to 2024, okay, that was 163%. And if I go 2024 to 2025, come on. I am not good at using this ruler tool. To 2025, okay, 120%. Okay, so you see the last few times that we did it, it was about 100 to 50% in a year. Whereas before we were seeing like 500 and like thousands of percentages. So what's the potential right now in 2025 to 2026? Okay, so where did we start out in 2025? Well, right now we're mostly flat. Okay, we're up 10%, which is better than S&P, but not that much better. So we're not seeing that serious outperformance. And maybe by the end of 2026, okay, if we just go linearly from where we are up to 2026, that's 30%. And so even a parabolic move, it would just be about 100% or so. So why is that? It's because the crypto market is starting to mature and we are in a different phase. The rapid, ginormous growth in the crypto space is no longer crypto. And the major limitation to crypto and it being able to grow even more is the fact that institutions cannot accumulate it. At least not, they can't keep on accumulating it. So with the huge amounts of money that institutions have, if you have a limited shares or a limited tokens or a limited coins of something, then they can't just keep programmatically buying it. There is a limit to how much they can pick up and absorb. So they have to move on to something else. So they ETF'd it, they institutionalized it, and then now what we're seeing, the rapid growths are in things like MSTR. Okay? So if I look at MSTR, what did it do from 2024 to 2025? 514%. And at one point it was at 772%. And what has it done so far in 2025? About 45%. Okay. Which is better than the 10% that Bitcoin did. So why MSTR? Well, MSTR is one of the first, or at least the first widely known, what we would call a Bitcoin treasury stock. So these are companies that are accumulating large amounts of Bitcoin, Ethereum, the larger coins, the more popular coins. And they could potentially serve as a treasury because there's no central bank for Bitcoins. And so someone has to backstop and guarantee. If you sell a contract or if you buy an option on a Bitcoin, who's going to guarantee that transaction? Generally, that's usually a central bank's job. And so for Bitcoin to actually work, it's going to need some sort of treasury. And the people who can serve as that treasury are the ones that are holding large amounts of Bitcoin. And those are private companies that are fully integrating Bitcoin as part of their strategy. They say, okay, maybe I do something else, maybe I don't, but basically a huge portion of my profits goes into accumulating these Bitcoins. And then later on, I could serve as a treasury or one of the treasuries for these Bitcoin type of services. So this is where the market is starting to move because an institution can buy and keep on buying tons and tons of shares of MicroStrategy. And if there's somehow we hit some sort of limit, MicroStrategy can always issue more shares, create and issue more shares. They'll dilute everyone else, but they can always do more of that. and uh, they're already registered, right? It's a company that's already registered with the SEC. They're fully regulated. They do all of their accounting, everything that we need them to do in order for an institution to be able to buy into it, they've already done. So what you're seeing now is, while institutions can't directly accumulate the coins, or at least not significant portions of it in a meaningful way, but they can accumulate these stocks. So right now we're in a phase where these Bitcoin's treasury type of stocks will start to become, or they'll be the new Bitcoin. They'll be the new several 100% performers, like we see with MicroStrategy. So I'd be focusing on stocks. No matter what, capital markets are driven by two things. Okay? They're driven by bonds, which is debt, and then they're driven by equity, which is stocks. That's it. That's capital market. That's the whole of capital markets. So Bitcoin try to break in as a currency, okay, but it's not a currency. There's no transaction value to Bitcoins. And if we want to say, well, we can create these other, what are they calling them? Something coins. Stable coins, right? Pegged to a dollar or pegged to something, and then we could transact with those. Then still, you need a derivative on top of that, and you need a treasury function on top of that. And so we're shifting, again, to be investable, you're shifting it back into the capital markets. So capital markets will always be, until they invent something else, the bonds and stocks. But what else? I mean, I can't, maybe if I could think of the next asset, then I'd probably become a gazillionaire and create the next Bitcoin. But basically, how does a company raise money when it needs it? And how does a country raise money when it needs it? A country raises money through debt, through bonds. It doesn't have the option of equity. But a company can raise it through, like, what is an IPO, or what before an IPO? What is a public offering, a private placement, PPO? What is that? Well, it's offering shares for investment. Round one, round two investment, whatever it is, however early you get in, you're generally offering shares for money. And the only other alternative is borrowing money. So that'd be debt. So we've got equity and debt. Those are capital markets, and that's what institutions invest in. So it's either going to be commodities, currencies, or it's going to be capital. And capital is what really actually drives financial, right? So currencies and commodities will drive economies, okay? And then the equities and bonds will drive the companies that control the commodities, okay, and control the goods. Okay. Are you using this for instructive platform? What are you using? Yeah, this is TradingView. This is TradingView. Do I think there's a very direct and strong correlation between Bitcoin and SMH, BTC USD, and SMH? It looks to me that it goes in and out. It goes in and out of correlation. So let me see. Let me get a clean chart. And if we do BTC USD divided by SMH. Okay. So if this was a flat line, right, then their ratio is steady. So we can see that over this period is actually very flat. then we decoupled a little bit, and then we're going back to this original relationship right here. So this highly correlated, decoupled, correlated, slight decoupling, and coming back. So we're going through periods of, so you can see here it was not correlated, right? They were spike, come down, spike, spike, spike. But it's only in these flat areas where you would consider it correlated. So yeah, recently they've been highly correlated, yes. And that is a sign of a maturing market as well. Because if I do, for example, SPY slash QQQ, okay, that's going to, yeah, I have to change the context. So flat, decoupled, right here, flat. Okay, so we've got correlation since probably mid 2023. We've had strong correlation, SPY QQQ, which means that during this time period, this huge bull run that we've had, it was driven mostly by QQQ, because SPY is just doing whatever QQQ is doing. Okay. They cannot play Bitcoin like stocks. Yeah, that's correct. Yep. Everything has a loophole. Yeah, yeah. They'll find a way around it. Yeah. Do NFTs play into this as well? So far, no. NFTs, the adoption of NFTs has been dismal. So until they get bigger and more widely accepted, and basically what is an NFT going to do? It's going to track some sort of asset, and mostly digital assets. You could presumably use them for physical assets as well, but I don't know how well that you could track like physical objects with an NFT. But for now, they're not nearly widely in play enough. Which companies are big holders of Bitcoin? I think you can Bitcoin treasuries. Should be like bitcointreasuries.com, I think. Bitcointreasuries.net. 253 largest holders right there. MicroStrategy, Mara, Riot, Metaplanet, Tesla. Tesla's not, I wouldn't consider a Bitcoin treasury stock. They have a whole bunch because for a while they accepted Bitcoin as payment. And so they managed to accumulate quite a few Bitcoins. But they clearly have a different business model than acting as a treasury for Bitcoin. And that's why GameStop has quite a bit also. But when they announced that they're going to start accumulating, like the market didn't really react. They kind of laughed at them because it's not really within their model unless they completely change their business model. Okay. Scott, brand new pit trader, great education. Oh, thank you, Scott. Thank you. Glad you're enjoying it. Incorrect. Use case is the most important factor. Witness XRP institutions are piling in now. Okay. Well, we'll see. I mean, XRP has its place also. That's more of stable coin territory if I am remembering correctly. But yeah. Okay. What about ETFs for ETH, Bitcoin, and in Japan XRP? What about them? Blockchain buck. What about them? Okay, let's see. What about IWM? Let's take a look. So we have the SPY. SPY, so mostly flat today, down just barely. And then we've got QQQ. Pulling harder pullback in QQQ. So that's what we started out seeing when we looked at the sectors, and we saw that RSP was spiking up as well. So this is confirming that. Then we can look at the Dow Jones. Dow Jones spiking up, still on a tear for the week, and IWM. IWM, nice little spike upwards. So on lower volume, well, maybe not at this point in the day. Might not necessarily be lower volume. So that does imply some movement. So we would have to see specifically which stock. So ARK Fund not participating. So that's interesting. So we would want to see within IWM which stocks are actually moving. And it might just be a small handful of stocks. So let's see if we can figure that out. So if we go into new filter, let me say market is Russell 2000. Let's see if that works. I don't remember the I need to look at my old other filters. Russell 2000. I guess I should have put a space between Russell and 2000. Okay. And then we can just sort by change. Tilly's, MBio, DSW, Blooming, Fossil. That's retail. This is all retail. So it looks like a lot, and we did see that earlier over here, that we saw retail. Oops. Which one's retail? Yeah, it's the number 2 sector today. So risk on in a, I mean, we're diversifying away from tech. And so, but we saw consumer discretionary strong. We saw retail strong. So there's still bullishness in the markets. It's just becoming wider breadth right now, which is actually bullish for the markets. So that's another argument that the SPY probably in this initial pullback is most likely going to be smaller, 3 to 5%, not necessarily 10 or more percent. But again, we'll see. We'll see when it actually happens. Blockchain Buck says gotta be gold, Bitcoin, XRP, ETF because cash is trash. Well, yeah, as confidence in governments erode, yeah, and if there is going to be a transfer from one monetary system to another monetary system, then that's going to be through assets like gold and like Bitcoin, hard physical assets. Diamonds, rubies, things like that, transferable items. That's what we see in every type of monetary movement and transfer. Traditionally, U.S. dollar also, because as a reserve currency, like for example, when Argentina went down, they would, a lot of people would just transact in U.S. dollars because it was stable. But right now, if your concern is about the US dollar, then you don't have that luxury. So then, yeah, it would be these other types of assets. A soft beep sound is a recording alert. Oh, maybe. Yeah, I haven't heard it at all. Trump's bill just passed. Okay. So did that have an effect on the market? Where's my... Meh. Okay. All right, so that's what I was talking about, things being priced in. Will we see a delayed reaction? Maybe, but the initial reaction is always the most telling. So We didn't really see any movement on the S&P, no significant movement. Like we didn't suddenly move out of the range that we're trading today. So the market is just kind of, so right now, what we're seeing is a very tired market. The market is kind of done with news. We started to see that when, oh, Iran and Israel are shooting missiles at each other. Oh, the U.S. bombed Iran. Oh, we have a ceasefire. None of that really changed the trajectory of the markets, and we don't see any unusual bars during that time period. Zero. These all look normal. It's not like tariff, Liberation Day, okay? 90-day pause, whatever. So the market is tired. It's tired of all the news. Oh, Elon Musk and Trump are having a tiff, and whatever that was. I don't even know where that was anymore. Okay. Oh, round two. Elon Musk is having a tiff about this bill, and then whatever the drama was, Trump threatens to revoke all grants or whatever that government support that Elon Musk is receiving. The market just doesn't care anymore. And so we're finally getting desensitized to all of the news and all of the drama. The market is just going to do what it's going to do. Right now, it is up. There's strength. There's a lot of optimism. And it is about time for a nice little pullback, little baby pullback. And then we'll see from there if we can continue to move higher. So that's just kind of what we're waiting for right here. It doesn't necessarily have to happen, right? It doesn't have to happen on our timeline or time scale. Just because we've seen this right here and then we get that pullback doesn't mean we're going to necessarily see that right here. It could keep on going a little longer, but at some point it has no choice to move down and correct itself. It could be another 10 days before it does that, but at some point it is going to do that. Okay. And past the Senate. Okay, now goes to House. Okay. Okay, so we might see reaction tomorrow. Okay, and that's okay. Okay, so so one way that we avoid all of this is if there's anything I've learned in all my years in the markets and what I learned as a professional is that Wall Street goes about its business. There is a certain percentage of Wall Street that is in the news, in the headlines, that is reacting and responding to that. These days, that is mostly algorithmic. They're just bots. It's not a human there going and like, oh my God, this news happened, that news happened. No, there are just bots that are scraping the news and then trading that and trying to drive prices up or drive prices down in order to scalp or to make a VIG, what we call a VIG, a certain amount of that they're looking for. So the rest of Wall Street, especially the human-driven side, we're not looking at that type. So if you look at my programs, I'm always looking to the market maker. And if I'm directional, I want to see what institutions are doing in order to pick a direction. And if I'm trading non-directionally, then I want to see what market maker is doing and how they're pricing everything. So if you were here yesterday for Lance's, his thing was based on a market maker move. And so that's their viewpoint on where prices might fluctuate and trade based on that. So I have my own kind of version of trading similarly, basically taking a look at the market maker move and then trading the market based on that. Because when you do it that way, you can ignore a lot of this news. News only affects a market for 1 to 3 days, maybe 4. unless it is a fundamental shift. So a Senate bill could create a fundamental shift in the markets. Why? Because a whole bunch of government money used to go into alternative energy and now it doesn't. That is a fundamental shift in certain sectors inside the markets. So that could shift it in a long-term view. But most things don't affect most news does not affect the long-term prospects of individual companies, and therefore it will not affect the long-term prospect of the S&P 500 or markets. Right? Okay. Yeah, so I'm going to start talking about my morning payout program. If you guys are interested, right now it's my most popular program. People are raving about it. I get testimonials about it all the time. And I think now is probably we shouldn't be doing this